Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial secrets of the companies you see every day. Today we're diving into Wisconsin Electric Power Company's latest financial report, and let me tell you, they're making some big moves, especially with their investment in the future of energy. Let's start with the big picture of the income statement. For the second quarter ending June 30th, 2025, Wisconsin Electric Power Company reported operating revenues of over $1 billion. That's a solid jump from $902 million in the same quarter last year. This increase is partly due to a rate increase approved by the Public Service Commission of Wisconsin, which is great news for them, and also a colder spring weather pattern that increased energy demand. Now, the bottom line net income attributed to the common shareholder, this nearly jumped from $85.3 million in the second quarter of 2024 to a whopping $118.5 million in 2025. That's a roughly 39% increase, which is fantastic. For the first 6 months of the year, net income reached $3 million last year. That's a massive 43% jump, showing a strong start to the year in terms of profitability. Looking at the balance sheet, accounts receivable are sitting at $621.4 million after accounting for reserves. While they did write off a significant $52 million in receivables over the first 6 months of the year, this is partly due to their winter moratorium ending and customers being disconnected for non-payment. However, the overall allowance for credit losses decreased, which is generally a good sign. Now let's talk about their biggest assets here, their property, plant, and equipment. This is where they're really investing, with a net value of over $13.4 billion. This reflects significant ongoing capital projects, and we'll get to those important investments next. Their common stock equity has seen a healthy increase. Additional paid-in capital jumped substantially, driven by a significant equity contribution from their parent company, WEC Energy Group. This shows strong financial backing as they push forward with their ambitious plans. One of the big numbers here is the regulatory asset related to We Power Finance leases, which stands at over $1.15 billion. This is a significant financial commitment, but is recognized as a regulatory asset, meaning they expect to recover these costs through customer rates. Now let's talk about where the money is going. Capital expenditures are a huge focus. For the first 6 months of 2025, they spent a massive $869.1 million, a significant increase from 548's CPATL plan to invest heavily in renewable energy, natural gas generation, and grid modernization. They are planning to spend over $3 billion just in 2025 on these projects. The company is actively transitioning its energy sources. They are retiring older fossil fuel plants and investing in renewables like solar and wind, and also beefing up their natural gas generation capabilities. They're even looking at projects like the High Noon Solar Project and upgrades at Oak Creek Power Plant to support more efficient natural gas turbines. This strategy addresses environmental regulations and also aims to provide reliable and affordable energy. They're also making significant investments in liquefied natural gas or LNG facilities. This is a strategic move to ensure a stable and reliable natural gas supply, especially during peak winter demand, and to reduce the chances of natural gas distribution system constraints. They're proposing to build these facilities to enhance their natural gas infrastructure. The company is actively acquiring and constructing new renewable energy projects. For instance, they've received approval for the High Noon Solar Facility, and they're also involved in projects like Paris and Darien, which include both solar generation and battery storage. These investments show a clear commitment to a clean energy future. Now, let's touch on climate change regulations. The company is keeping a close eye on EPA rules concerning greenhouse gas emissions. They are adapting their plans to meet evolving environmental standards for both their electric and natural gas operations. Their strategy includes retiring coal plants and increasing their reliance on natural gas and renewables, positioning them to comply with these regulations. When it comes to risks, the company states there have been no material changes from their previous annual report. However, they do acknowledge ongoing risks related to supply chain disruptions, inflation, and the impact of government policies and regulations on their operations. These are important factors to consider when evaluating their future performance. And finally, the certifications from their principal executive and financial officers confirming the effectiveness of their internal controls. This is a standard but important part of these filings, assuring that their financial reporting is reliable. Overall, Wisconsin Electric Power Company is in a period of significant investment and transformation. They are aggressively pivoting towards renewable energy and cleaner natural gas sources while managing regulatory changes and economic uncertainties. Their strong financial performance in the first half of 2025 is a testament to their strategic planning and their parent company's backing. However, the considerable capital expenditures required for these projects, coupled with ongoing regulatory and market risks, will be critical to monitor. For now, they seem to be navigating these complexities effectively, delivering solid financial results while positioning themselves for a future driven by cleaner energy. What do you think about Wisconsin Electric Power Company's investments and financial performance? Let us know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe to Corporate Decoder for more in-depth financial analyses. And don't forget to join our Discord community linked in the description for even more exclusive content and discussions. Thanks for watching, and we'll see you in the next video. This